Hey, what's up, everyone? We are live. So let me do my compliance stuff first before I get into it. And then there's a few questions I want to answer as well. So if whatever I do say in this video is not financial advice or recommendation to do anything, okay? It's just some of my own observations and views I want to share with you guys. And before I get started, Cal did mention, something about, clickbaity thumbnails. Unfortunately, I'm really sorry that is the case. If some of my thumbnails are really clickbaity-ish, I'm really hoping that my research kind of shows through, it kind of makes it worth it for you. But there is part of that, YouTube platform that I have to play by their rules essentially. And if it doesn't entice you to click, then yeah, so it doesn't quite work for YouTube. Nevertheless, the first thing I want to talk about is Kogan, whether it has bottomed, and then I want to talk about Nearmap. If you just joined, if you have any questions, leave in the live chat or later in the comments. I will read through all of the comments and try and answer all of the questions if possible. I'm gonna go for about half an hour to about 45 minutes. We'll see how we go. More likely half an hour. Yeah, and then we'll go from there. So the first thing I want to talk about is Kogan. Now, I want to talk about the bad things first, and then I'll talk about the good things, and then I'll sum up everything on my own observations on whether I think the company, well, essentially the stock price have bottomed. So I think, from January onwards, it was just bad news after bad news. And to be honest, even from this point onwards, it wasn't exactly bad news either. It's just when they released the first half yearly report, that $414 million for that 6 months, it didn't match the investors' expectations. I want to talk more about that in just a second, but the subsequent follows and sell-offs really kind of came from supply chain shocks, not to mention the macro environment is changing, which means that investors are looking for different kind of value stocks in their portfolio as well. So there's a big sentiment shift in Kogan, but the more recent drama is around the supply chain shock, which led to excess inventory and then extra warehousing costs, and that impacted adjusted EBITDA. But yeah, if for whoever that was lucky to cash this at $10, good on you. But since then it has bounced a little bit. So I want to talk a little bit about. First, I want to talk about shorts because Kogan has attracted a lot of short sellers, and that was it kind of started already towards the end of the year, but then in March it got more intensified, and then in April it got even more intensified. And I have marked this over here. Don't know if you can see it. Give me a second. So at the share price, well, according to when those reports were put out, it seems like there was shorts loaded here, and all the way down here as well, because skyrocketed from here. The problem with these reports is that there's a 4-day lag, so we don't actually know what happens on Friday, etc., etc. But I will talk more about this in just a second because I think it is this company itself could be potentially primed for a short squeeze. But I want to talk about revenue first because that's really important to kind of understanding whether the stock has bottomed. This tool that I use is called Ticker. It's just a free tool, and I'll leave a link in the description box below for any of you who do want to try it. So when you look at the revenue, so this is half yearlies. I dragged it out to about 15, 16. And one of the things that I want to point out here is that when this report was released earlier in January, people, investors, thought that didn't meet their expectation, and I felt like, it's a big switch. So maybe it wasn't necessarily meeting the investors' expectation. Maybe investors just don't really anticipate that they could replicate the same result. But the one thing I do want to point out is that I've heard some analysts compare some of Kogan's numbers to COVID peaks. I don't really think that will be a good comparison, because there is a seasonality point to Kogan's numbers. So if you look at the January to June numbers, they tend to be a little bit more quiet. And then during the holiday seasons, which is like July to December, that's when people like really go hard and spend. That's kind of the holiday seasons to really go out there and spend, right? But the crazy thing about June, especially in 2020, is that there was two major tailwinds pushing Kogan forward. One, you have work from home, and then you also have stimulus checks giving people more money to spend, right? But once that's kind of wore off, that's kind of the big concern this year for Kogan, whether whether the consumption power is still there from people, and that's kind of majority of the bad things, if you will. I mean, there's more there's more concerns around their increased spend in marketing and also warehousing costs. Frankly speaking, I think that like I don't really know where is this assumption coming from where, as a company scale, you spend less money on marketing. This is not Tesla, like it's not a product-led company, it's a marketing-led company. So as they scale, I don't assume them to stop spending. I, expect them to spend more, just whether they can spend efficiently, right? And then with the whole warehousing costs, I think that's more transitory, that they should have learned from that, and then they'll, once they fix it, they should move on. Shouldn't really happen again. I think it's just mostly from the supply chain issues that they should have gotten under control, unless there's an operational flaw within their business model. But in my opinion, if there was a flaw, then we would see that, especially during the peak periods, because that would have broken the business, but it didn't. So not to worry about some of the bigger concerns. So those are mostly the negative stuff. But so now I want to talk about a little bit more of the positive things. Now, we already talked about revenue growth. That's fine. Gross profit and the gross margins have kind of expanded, which is kind of driving more efficiency, which is good to know. But if we look at the balance sheet, they ended 2020, with $78 million. A big portion of that cash outlay went to Mighty Apes transaction. So they still have tons and tons, they still have tons of cash, right? And I suspect that a portion of this cash will be sent towards finalizing the transaction for Mighty Apes. But it has multiple tranches, so I'm not too worried about that. You can also spend that money towards acquiring more business to grow faster, but that's something that we just have to wait and see. But if we look at the current assets to current liabilities, let me just get rid of a few columns. We can see that the total current assets to current liabilities is about 1.5 times, right? So that means in the short term that they really shouldn't have any issues withstanding any external shocks. So that's a relatively strong balance sheet, and they have no debt, barely any. $1.24 million, that's barely any debt. So it's a very, very clean, balance sheet. The only thing that I have an issue with Kogan is that they distribute a dividend. I'm not sure if that's more of a marketing, tactic to attract more investors. I just thought that most people will assume that Russell and Kogan is a much better capital allocator compared to some other people. So instead of distributing that as dividend, isn't it better to just kind of give that money to Russell and Kogan to allocate that capital? Okay, now the final question is valuation, because ultimately that ties everything together, whether they have bottomed, right? And again, I want to remind you that I'm not really trying to say buy, sell, or hold, because I can't, and this cannot be financial advice. But just looking at the if you go to the valuation tab right here, and then you click on next 12-month enterprise value to EBITDA, we can chart this on a longer time basis. So if we chart this over 3 years, you can see that Kogan's average EV, next 12-month EV EBITDA is about 16 times. Currently is trading at around 15 times, so it's not that much below value, below average, that is. If drag it to 1 times, is much higher, and it's trading at around 15 times. Now, one of the ways to gauge value is all on a relative basis. The more robust way of calculating the intrinsic value for a company is, generally speaking, let me just check if there's any questions on your end. Okay, great. Okay, nothing's happening. Good. So one of the ways to gauge relative value is all about comparing Kogan's business to another similar sized business, right? So I have put in Temple & Webster, JB Hi-Fi, and also Redbubble. They're not the best comparisons, but it kind of helps us gauge value. And I'll show you what I mean by that. So Kogan has around a 15 times next 12-month EV/EBITDA, right? And if we go to the estimates, and then we'll look at what analysts are expecting the revenue to grow by. Analysts are expecting Kogan's revenue to grow by 30% every single year. That's what KGN actually means, compounded annual growth rate, right? Okay, so that's Kogan. But what if we look at Temple & Webster, because they are commanding a massive next 12-month EV/EBITDA at 73 times, right? So if we go to Temple & Webster, go to the company, go to estimates. We're just going to adjust this timeline a little bit, and then we'll look at the KGN. So the one of the main reasons why Temple & Webster is justifying such a high multiple is that they're anticipated to grow at a much higher CAGR. At the same time, we have to acknowledge that they're coming from a lower base, right? So it's not as a high base as Kogan, but at the same time, we have to ask the question, how can they grow, like almost double their revenue again this year, right? Like, are they actually able to do that? Or is that estimate overly optimistic? I'm not sure because I haven't dug into the business enough, but that's a question you have to ask, right? Because to justify that kind of multiple with that kind of growth rate at the given macro environment, that seems pretty expensive. And similarly for Redbubble, another way to look at this is if we look at Redbubble, I know that everyone's talking about Redbubble, but let's just take a look. So if we look at the revenue CAGR, so it's kind of the similar growth rate as Kogan. But if you look at the EBITDA margins, so it's about 30% growth rate, right? So very similar to Kogan. We look at the EBITDA margins. Let's just go to Kogan's EBITDA margins. So it's about 9.9% moving towards 10. And it's about 4.4 moving to 10. These are estimates, right? So it may or may not turn out to be exactly like this. So we'll go back to the valuation. You can see that for Redbubble, they are commanding a higher next 12-month EV/EBITDA, growing at similar revenue growth rates at a worse EBITDA margin. So that's kind of like how you would, gauge value, if you will. The most robust way is always discounted cash flow. It's just some of you guys watching are still relatively new to investing, and discounted cash flow can be very daunting. So I think this is a really good way to get started, and then kind of as you get warm up to it, discounted cash flow is the next best way to think about this. So from that perspective, on a value basis, at a 15 times, I think it's relatively reasonable, where Kogan is priced. It's just currently there's a lot of shorts, pressuring the stock down. Not to mention there's just a lot of, different pieces of commentary around how, Kogan is not going to grow as fast, so on and so forth. And frankly, I think of this a little differently, in the sense that unemployment rate, is still not really quite at the pre-pandemic heights. So I think that because of the stimulus, price wasn't exactly an issue. But if you take that away and everyone is spending money, the money that they actually earned, then I think that people will be a lot more price sensitive. And I will actually think that's beneficial. That's beneficial to Kogan, because I think it's a fairly reasonable observation that Kogan is, their customer base is a lot more price sensitive. It's not the people who, flash their credit cards in the air like they just don't care, right? It's more people who care more about prices. And I think that will almost be more beneficial for Kogan compared to other companies. And the one last thing I want to talk about is that I think most people think of Kogan as an e-commerce platform or place where you buy items. I've started to think about Kogan a little differently, where I think Kogan is a e-commerce sales channel. And what I mean by that is what Kogan is essentially doing, at least in my opinion, think of it almost as speculation, is that as you get more customers onto the Kogan database, if you will, you're starting to learn more about their behaviors, what they buy, when they buy, what they buy, at what price do they pay, so on and so forth, and their return behaviors. You can actually sell the access to customers to other partners, whether that's energy, credit cards. So Citigroup does their issuing for credit cards. They can, almost go down any vertical. It's about which one is a priority to them. It's very, very different. to other e-commerce players, right? Because Temple and Webster is like furniture, but Kogan have this almost lateral move that they can move across different verticals if they really wanted to. So that's another growth lever that I think they can pull. I think, personally speaking, I think we might be in for a surprise because the sentiment's so negative towards Kogan. But in saying that, I do think that if we look at the price charts here, in saying that, I think that without a proper catalyst for Kogan, like either that's surprising earnings report or so on and so forth, I think it's just going to go sideways for a while. It's not really going to go anywhere. I think you do need some kind of catalyst to really, push the buyers into the market. And then as that go up, especially towards the $13 mark, some of the shorts might, it might cause too much pain and they might have to cover the position. That's kind of where a lot of the downward pressure for share price will be a little bit unleashed. But nevertheless, one of the main reasons why I haven't pulled the trigger on Kogan is just because when we talk about the competitive advantage for Kogan, I'm very, very confused because, whenever we talk about moats, like the economic moat for a business, I would prefer to like understand a business where the moat is quite clear to me, and the moat is not very clear to me at the moment, especially for Kogan. And the switching cost is quite low. Like what's going to stop me from just going to Catch of the Day, click a couple buttons, and get the stock from that, right? So frankly speaking, like that's one of the reasons why I haven't really been able to pull the trigger on Kogan, just because the competitive advantage is not clear to me. So that's essentially it. I do think that, to answer the main question, whether Kogan have bottomed, it's very pessimistic, valuation at the moment. And the one more thing I want to share with you actually on Kogan before we move on to talk about Nearmap is that I looked at the Morningstar valuation for Kogan. The fair price, I mean, you can take these things with a grain of salt, right? Like sometimes it's subjective, sometimes it's not subjective. Valuation is more like an art than a science. So they're saying that the fair value is about 1150, and I think that's relatively fair. As it stands, I think, at its current growth rate, without anything else, I think it's fairly reasonable in terms of where it's priced. If you have any questions, by the way, let me know in the live stream or the comment section below. That'll be super, super helpful. But so that's essentially Kogan. I want to do a few minutes on Nearmap, and then I'll answer your questions, right? Okay, let me just pull up Nearmap. As many of you know, Nearmap have recently upgraded their annual contract value. So they essentially said that it went from 120 million to about 120, like the range have upgraded in terms of their annual contract value. And they did have a slide deck. There's just a few things I want to point out, and then I want to talk about valuation, and then I want to talk about trading halt as well. Actually, let's talk about trading halt first, because as soon as that report was released, the market was open, it just popped, right? Popped about 14%, and then went into trading halt because of a legal dispute, with a US company, which is quite a big deal. Should probably read into that a little bit more. I'm not going to mention too much on that at the moment because it's better to wait for their confirmation than my speculation. So in terms of highlights, I'm not going to talk about the annual contract value because we know that's going up. What really stood out to me is that gross margin have expanded, which is great. Sales team contribution have also doubled. Well, almost doubled. What that essentially tells you is that the sales team members that they hired is starting to yield fruit. And that's really good to know, because sometimes when you hire a sales team, there's this kind of like ramping period where, they settle in, they start talking to clients, they start prospecting. It takes time to close deals. And it seems like the sales team has starting to yield fruit, and that engine is starting to spin. That's really good to see. Retention have also gone up as well. What you need to know when it comes to SaaS businesses is that for a company to acquire customers, it costs a lot of money. Like they might fork out, 10,000 or 20 Gs to acquire a customer. And in order to recoup that cost, you really want retention to be as high as possible to recoup the costs, and so that you can redeploy the capital to, acquire more customers. That's why retention is really, really important. Now, Cash at Bank, I'm indifferent. It's just saying that they have a lot of cash. In terms of ACV movement, I don't know, I don't know if it's just me, but I noticed that the new business have kind of slowed down a little bit. But the net upsell, so basically they're saying that new business has kind of slowed down, but there are a lot more, they're selling to the existing customers a lot more. The churn have gone down, which is good as well. Churn is essentially people leaving the platform, or stop using the product. But overall, these are really good results. It would be that much sweeter if new business kind of gone up as well with a better net upsell. I think the rest is pretty straightforward. There was highlights around how North America really is driving the business forward. But there's a lot of questions around the legal disputes around North America at the moment, so I'm not going to talk too much about that. We already talked about these two things. Yeah, like this is all North American stuff. They're just saying like different verticals is growing really, really quickly because of the dispute. I'm not going to comment too much on it. The last thing I do want to make a comment on Nearmap is that, like for me, I try to gauge, relative valuation, to see whether I, want to dig into it further. And let's look at the estimates, right? So these are analyst estimates on Nearmap, and to see how fast they will be growing. And analyst is expecting Nearmap to grow at around 18% per year for the next 2 years. It could be higher, it could be lower. These are always just estimates, so take it with a grain of salt. But what is important is that if you bring it together with valuation, and then you look at the valuation at the moment, the next 12-month EV EBITDA is 42 times, and you're paying for an 18% growth on a year-on-year basis. That's quite expensive, in my personal opinion. And yeah, like this is one of the reasons why I haven't, I'm not interested enough in Nearmap. But overall, they're showing that they have a great business going. Whether they can, deal with the legal disputes, that kind of impacts the future prospects of the company. But nevertheless, it seems like they're on a good trajectory. And at the current price, I'm not keen, and the business itself, not keen enough as well. So that's about it. So let's go through some questions. Okay. So Mario asks, any tips for young investors looking to build a solid dividend portfolio, mainly focused on LICs? I think the main tip is you want to look at what's inside the LIC, what's their focus, what's their objective. I've actually done a few videos on LICs, so feel free to check that out. But generally speaking, you really want to know what is the management style for the LIC, what are their fees, and what's actually inside the LIC, because I'm quite particular in that. And also, I think it's important to keep things simple. Don't complicate it with like having just a crap ton of different LICs. I think for me, when I first started investing, I kept it super, super simple. I had Argo, that was it, and Wax, I think. So 2 of them, that was it. Didn't have any more than that. Yeah. So thank you guys for dropping by. Really, really appreciate it. Kudos. So pass. Amazon is coming big time. JBI5 and Kogan. Yeah, I share the same sentiment as a few of the other guys who have mentioned here, where that's being said for the longest time, and that's I think Amazon will give everyone a run for their money, but not to the extent that it will completely eliminate competitors. There's more comments around Amazon. Yeah, I think so as well. Like they'll do okay. I think JB Hi-Fi and Kogan is here to stay. Like whenever with different tech products, I love going to JB Hi-Fi just because they have that retail experience. Hey Renee, I noticed you're using a number of research tools. Are you comfortable listing your free? Yeah, actually, I made a video on that. So if you go on my channel, actually, let me just show you. I made a video purely just on that. So if I just go to my channel, go to videos, there is one. Right here. So the top 5 free tools. I list all my tools, for you guys. So I'm not too fussed about not like sharing, etc. So check that video out. JB High Five. Yeah, I think so. Thank you, Tom. I appreciate it. Hey, by the way, if you guys want to see me to do coverage on a stock in the future, let me know in the live chat or in the comment section below. I'm really trying to think about how I can add more value to my audience. Recently I've been spending a lot of time, creating macro videos. And I think that's really important because, I think to become a great investor, I don't want to not pay attention to what's happening, across the world. So that was really, really important to me. And I'll probably keep doing that. But if there's any stock or videos you'd like me to create in the future, let me know in the live chat or comment section below so that I can prioritize them. Which would you choose, MGF or what is MGF? Not sure. Is that a stock? Can someone tell me? Keep up the great. Thank you. What do you think is going on? I have not kept up with Infinity Lithium, so I don't really know what's been happening. But if someone could update me, I might do. I might share some of my opinion on that. But when I first did my research on Infinity Lithium, I remember it was one of my renewable stocks videos. It's just they tick the box for me when it comes to having an asset in Europe, because EU is the second fastest growing EV market. So you do not want to, ignore that. Where do I see value in Appen? I actually don't like the business at all. I think that, they sell data sets, and to describe it as an AI company, I think will do the, industry a little bit injustice. There's being... So for me, Appen is, I'm not interested in the business model enough. So for me to gauge value, I would do something similar to what I did for Kogan and also Nearmap. Now I'm just kind of looking at EV EBITDA and the revenue growth rate. But more importantly, you should probably do more qualitative research on where do you think the business is going to go in the future? Because the stock market is forward looking, right? It's not really it kind of helps understand what's been currently happening. It's more important to understand what's gonna happen in the future, right? So for me, Appen is not even on my watch list. Split it. The problem with buy now pay later is that I think it's a winner take most market. The rest of the smaller players, besides Zip and Afterpay, and Affirm, Klarna, I think there'll be broader consolidations. So not too many thoughts on Split It. And yeah, I've done a video in the past on that, and it was not that exciting to me. How do you believe the rising inflation rate will impact the economy in the future? Well, it really depends, because there's two schools of thoughts on inflation currently. Some believe that inflation will be transitory, which means that it would basically spike, and then it'll subside. And then there's the other school of thought where some people believe that inflation will be more persistent, which basically be here for a long while. So it really depends on your view. I've made multiple videos on inflation rate recently. Highly recommend people to check it out, especially if you're interested. So the one that I'm talking about is this one right here. Why you shouldn't underestimate the coming inflation crisis. That one's a really, really good one to watch. My personal belief is that inflation will be here. I think is here to stay. But I'm obviously open to changing my mind. And one of the main reasons why I think it's here to stay is that people are underestimating, the power of printing a lot of money. I'll talk more about that in the video, because if I start blabbering on in the live stream, I think people just lose attention. So overall, I think that rising inflation is likely, depending on how severe the inflation is and how persistent it is. The central banks are likely going to raise rates. If they raise the interest rates, a lot of the growth stocks are going to get absolutely hammered. So I think from a stocks point of view, it's going to hurt. But from an economy point of view, it's actually not a bad thing. Rising inflation, depending on whether if it's consumer price inflation, it actually shows that we're recovering, and we're growing faster because money is exchanging hands much faster. That's actually not a bad thing. It's just when it's too strong, too hot, that will really hurt. Yeah. So that will really hurt the economy. I talk more about that in that video, so feel free to check that video out. Oh, sorry, my question just skipped. Any thoughts on the turmoil? Yeah, I mean, AMP have gone through so much like drama. The only reason why I am somewhat familiar with AMP is Shane, the economist. I think his name is Shane Oliver. I watch a lot of his macro views, and I feel like AMP has got such a gem with Shane Oliver. I love his macro views. He's such a down to earth, kind of guy. But in terms of as a company to look at currently, I haven't dug into it enough. But they have so much drama going on at the moment. I'm just taking my time at the moment. Like I just have other things I'm currently looking at. There's a question on iron ore. I will take a look at that. I'm not too much into iron ore at the moment. Have you kept up with Tauga? I kind of have. Like, I saw the latest quarterly reports, and then after that, there was just a lot of crazy movement with Tauga. Like, there was recent spikes, and then it kind of dropped back down. Feels like for no reason the stock is just spiking, and to me that kind of concerns me because there's nothing happening. So for me, my sentiment is staying the same. Like, they're going to be a key piece to, our green revolution. You need graphite, at least in the short to medium term. So my sentiment is staying exactly the same. I'm, diamond hands, if you will. That's I'm not selling at all. Sorry, so I'm looking at more questions. Guys, if you have more questions or stocks you'd like me to cover in the future, let me know in the live chat or comment section below. I'm just going through it at the moment, and the questions are making these things jump. Great video, hit the nail on both. Thank you, Callum. Wow, really? Okay. Yeah. Well, firstly, thank you. But yeah, Nearmap, just not keen enough, to be honest. Have you? No, so the thing with uranium is that it's not as, I think it's a lot more complicated for me to understand. It's not as simple as the battery supply chain. So and nuclear, it's not like there's a perception, that you have to navigate as well, right? It's not just rising nuclear usage, but there's the perception that comes with the material that you have to navigate. And for me, I'm just not equipped enough to really dig into that. When I post the session, should be on YouTube later. What do you know about online retail, credentials in the sector? So for me, I think it's best if you just like check my LinkedIn profile, but as it stands, I currently consult online retail companies on how they scale and how they grow their companies. My professional experience is mostly in growth marketing, like SEO, SEM, and a lot of the paid marketing stuff. That's my bread and butter. So that's why I know. That's why I'm a little bit more comfortable with online retail. But that's not to say that I still get schooled when it comes to the back-end infrastructure for online retail, because what I'm talking about is the customer acquisition and customer retention stuff. But there's a few guys who are incredibly experienced from corporate in my Patreon, where they're talking about customer service and also logistics. So that part of the business, that's my weak spot. That's not something I'm good at. But generally speaking, when it comes to customer acquisition and customer retention, that's kind of like my bread and butter, right? So that's my credentials, if you will. Current update on A2 milk versus bulbs, in addition to your videos on them. So I talked about A2 in my Patreon for quite a bit, and one of the reasons why I've never really got onto it is because unless the CEO have talked about his strategic plans on what to do with A2 milk and how to win back, the customers, I'm just not really comfortable going anywhere near it. I've talked about in my old videos about how Vietnam could be a really good market for them, and because there is so much Chinese influence there. But regardless, for both Bobs and A2, this Chinese, like the tension between Australia and China doesn't really help. And not to mention all of our borders are closed, at least to, some of those areas. So until that kind of gets better, yeah, it's going to be rough. So not too many comments on that. Any thoughts on buying gold miners right now as gold prices are unfavorable at the moment? Yuki, you're talking to the wrong person when it comes to gold. I maybe it's just me, but like I've always thought to be more bullish towards Bitcoin than gold, because sometime last year I had an option between gold and Bitcoin. I went with Bitcoin, and yeah, so yeah, talking to the wrong person about gold. Can I look into GNX? Actually, don't know what that is. I'll check it out later. Affinity Lithium and trading halt for the last 2 weeks. Whoa, really? Didn't know that. Comment on Dub. Don't know anything about Dub. If you guys could tell me something about Dub, that'll be nice. Rare earth mining. Rare earth as in precious metals, or rare earth for electric vehicle motors? So I think it's quite different. So if it's for electric motor, for electric vehicles, I'm quite bullish on that. But most of you guys know that like I'm very bullish on electric vehicles, and I try to study as much as I can about like the battery supply chain. So but I didn't put in that much time on rare earth, so not too many comments on that. Hey Sean, do you have insurance over your portfolio if market declines significantly like BB? No, I don't. That could be a downfall on my part, where maybe I should have some kind of hedging for my portfolio. But as a retail investor, my time horizon is really long. Like I don't need to show anyone my P&L for the month. Like I don't need to show that, hey, my portfolio is growing this much, we're making this much money. Like I'm just not an institutional. I'm just not an institutional investor, so I don't have insurance on my portfolio, if that's what you mean. And sorry, one last point on BBUS. I think the challenge with hedging a portfolio like that is that you have to have it before the decline, and for me is like, how do you know? Like you don't really know. Like timing the tops and bottoms of the market is like incredibly difficult. That's why I don't try to do it, and that's one of the reasons why I also don't have hedging like those as well. Dogecoin. Oh man, it's gonna hit $1. At this point, it's probably gonna hit $1. Do you guys want me to talk more about crypto? I'm trying to learn more about it, and I would love to talk more about it. I'm just not sure if you guys are interested in that kind of stuff. If you are, like, I don't know, gently hit the smash the like button, just so that I know you guys enjoy that kind of stuff. Thanks, Renee. Comment on Zip. Not too many comments. The problem with growth stocks, in the current macro environment is that it's just not conducive. Like, if interest rates go up, what people neglect when it comes to Zip is that Zip is actually a triple marketplace. So you have, like, for example, you have the merchants, you have the consumers, and then you also have the banks, because you need to borrow the money from the banks in order to facilitate this transaction between these two parties, right? So if interest rates go up, not only does it hurt the valuation for the company, but it also increases the cost where they have to borrow money from the banks in order to do the transactions, right? So I think other people are more equipped to talk about Zip, but from my perspective, I think on a longer term basis, if you can just ignore the short term stuff, they're doing everything right. You can't blame them for, and they're more versatile in the sense that they also do business lending. Well, there is that kind of business component as well, whereas Afterpay is purely consumers, right? So they'll be more like vulnerable to consumers suddenly stop consuming. Whereas Zip can potentially ride the wave of business recovering as well, right? So my perspective on buy now pay later is that it's a winner take most market, and I think the smaller players will eventually consolidate. But yeah, Zip have done just so many things right. Even with the recent campaign, I think that like they should have done it ages ago. Just zip it. Don't know why they didn't, but yeah. Update on Nitro. No, I haven't kept up on Nitro, so maybe you can keep me posted. Maybe I'll dig more into it. We'll see. We'll see how it goes. Megaport. So Megaport was super interesting because if you guys are on LinkedIn, follow Bevan Slattery because it's so interesting. Sometimes he just talks about different stuff that's related to the companies he invested in. Super interesting. And I think Megaport is actually one of the companies that's being shorted right now. And yeah, I mean, as a business with the current macro environment, it's going to hurt a lot of these growth stocks. But in saying that, I think that very few investors actually understand what Megaport actually sells. So there is an opportunity for those who are willing to do the homework to understand what exactly do they do. I've actually made a video on Megaport. And there is definitely utility. There's definitely a value proposition from Megaport. But at the same time, they're also very vulnerable to, like, essentially what Megaport sells is that they allows you to connect to multiple data centers, without having to basically bring your own cables and stuff, right? So what's stopping other what's stopping data centers from just connecting or bridging connections themselves and completely removing Megaport? That probably sounds like mumbo jumbo, but check out the Megaport video. I promise it'll make it more clear. BTC is really, yeah, I mean, it is. Yeah, like it's confusing, like because because I read a lot of macro research recently, there are a lot of gold bugs who believe that there's still that value for gold, and I think your biggest gains is when you found something to be true when everyone else believed that you are wrong. Like, and to me, gold kind of feels like that, where our generation is like saying to gold that like, hey, I don't want this. Like this is like grandpa style. I want the new school stuff like Bitcoin, right? And for me, when these kind of polarizing views happen, it kind of creates a vacuum of opportunity for those who are willing to challenge and go into like that pocket. And for me, I'm more interested in other things at the moment. So it definitely is. And it's very surprising to see institutions to go for it instead of gold, and that kind of proves the use case for Bitcoin more than gold. But yeah, that's a conversation for another day. TNT, is that the cybersecurity company like on ASX? If that is the case, can you give me a thumbs up, and then I'll try and answer that later. If I could comment on Adore Beauty, I made a video on Adore Beauty in the past, but since then I haven't quite followed it. So I might follow back up on that later. How much wax charge? Well, just check the website. It should tell you the fees. There is outperform fees. Yeah, it's quite heavy on fees. So it's personal preference. No one needs to do anything. Okay, it's all like your own personal choice and what you want to do. Thank you, Ken. I appreciate it. Thanks for the support. It really does mean a lot to me. Any views on BrainChip? Not yet, to be honest. I actually summarized a lot of my views on BrainChip on my BrainChip video, and I just think that there's a few people in my Patreon who are quite bullish on BrainChip, but they are incredibly well researched. So it's quite a balanced argument, between pro BrainChip and and a more bearish view of BrainChip. For me personally, I'm finding it hard to see how they can scale. and sell to a lot of different people, because at the end of the day, a company becomes profitable at scale, right? Selling chips just to NASA is not. You guys are probably gonna throw your pitchforks at me, but like, selling your chips to a few companies, it's not enough. Like, you need to sell it to like thousands of companies at scales to have the margins to win. And for me, like, I follow it here and there. It's just not too many views on that at the moment. Hey Stephanie, I was watching your other video seconds ago. Oh, thank you. Thanks, Stephanie. I appreciate it. A2 milk. I actually just talked about A2 milk earlier in the video, so maybe you could go back a bit. How do you beat FOMO? It's very hard, to be honest. It sounds really bad, but you might have to, like, I can only speak from my own experience. The only way for me to beat FOMO is I've experienced it and I know what it feels and tastes like, so that I can identify what to avoid. Because when we talk about FOMO, if you haven't quite experienced it, it's very hard to describe to you in that moment that the magnetism of FOMO. Like, I don't know if that makes sense to you, but like, for me personally, the way that I've learned to deal with FOMO is actually I've experienced that in the past and I've learned from that. And kind of taking my time to think about things instead of just like pulling the trigger. So it sounds counterintuitive, but in a way, I've experienced FOMO in order to learn how to beat it. So yeah, Doge definitely to the moon at this point. Some people have put the entire savings to Doge. It's a bit. I don't like. Sometimes I wonder if we're just living in a simulation. Like, what is real anymore? I don't know what is real anymore. Like, everything that we learned in finance just got thrown out of the window. Like, what intrinsic value doesn't even count? What I think about semiconductor shares amid the current shortages. I think with the semiconductor, US have announced a lot of different plans to put capital expenditure into semiconductors and basically building plants inside US. And I think that's going to be really good for that. In the meantime, Taiwan's still going to dominate that, sector. That, like, when there's a shortage or drive these prices up, that's an unfortunate kind of reality of that situation. I'm really hoping that sorry, let me answer your question. So I think it's hard to say where the shares are going to go, because you can always overpay for something, right? So given the current shortage, you're not the only one who's thinking about the shortage. That's the thing. So if there was arbitrage opportunities, people are already taking advantage of that. So I mean, take a look, but I haven't taken a look because I sold my AMD stuff, a while back just to consolidate. So yeah, not too many comments on that other than that. Hey Danny, yes. Yeah, just I held it. Diamond hands, not touching anything else. Yeah. How do you see the US market? Oh, thanks Nick. I appreciate it. We have spent a lot of time. I've spent a lot of time on the US market recently, just because it's a really weird dynamic, because you don't, like, you almost want to go for things when they're getting destroyed. You don't want to be overly optimistic. Like you don't want to go for things when things are at all-time highs, right? So while that, we're talking about cyclical rotations or like, reopening trades and so on and so forth. I do think, Janet Yellen today, I don't know if it slipped, but she briefly mentioned about hiking interest rates in order to tame inflation. So she's thinking about it. And the market freaked out, right? And then, as much as we think we're an independent country, we're just not. Like, our central banks follow what the Fed does over in the US. That's why we spend a lot of time understanding what's happening, from the Fed, because that kind of have a repercussion impact to the rest of the world, right? So in saying that, if inflation does run really hard, and it's probably going to run really hard for April, May, and probably June as well. If they change the narrative, if the Federal Reserve change the narrative and they say, you know what, we are going to taper our bond purchases, and we might even think about raising rates towards the end of this year, we are going to see, well, I think we are going to see a correction, and it should be a substantial correction on some of the high flying tech stocks. That's one of the reasons why, if that's something that you're interested in, now's the time to do your homework, because you do not want to be preparing when the opportunity show itself. We want to be preparing so that inevitably when the opportunity show itself, we're ready. So over the next 6 months, I think it's going to be really, really turbulent. It's going to be ups and downs, ups and downs, ups and downs. I've done a video on the market recently. It's pretty scary where things are at. But to say that, the entire market is overvalued, I don't think that is the case. I think that there's certain sectors that is a lot more overvalued compared to other sectors. So I'm actually really excited over the next 6 months, because for long-term investors, those are the opportunities we wait for, right? Like when earlier in the pandemic, when the market crashed, those are the moments that we're really been waiting for a long time. Not in terms of like health, the health crisis wise, but like from an investing perspective, these only come like it's like a once, twice, or thrice lifetime type opportunities, right? So I'm very, very excited over the next 6 months. Hey Jack, any thoughts on Wiser? Not yet, because I haven't studied Wiser a lot. I do know that Kenjo have done quite a few videos on Wiser, so yeah, check that one out. Kenjo's really high quality content creator. Whoa, sorry, my comments just jumped. Any comments on Doe? I made a video on Doe way early in the past. I think that it's hard. It's really hard, especially if you're trying to go hit up US like from day one. So, not too many opinions on Doe other than, yeah, you gotta show some progress. Yeah. And thank you, Phil, for the comment. I appreciate it. Thank you, Pascal. Thank you. I appreciate it. Thanks, Pascal. Thoughts on Indian ETFs? I did study a little bit on Indian ETFs. It's quite expensive at the moment. And there's a lot going on in India at the moment. If you do have family over there, I really hope that they're doing well, they're safe, etc. From an investing perspective, let me maybe I'll do a video on this later. But I have talked about like looking across the world for opportunities. Yeah, but India's a bit expensive at the moment. What stock do I think have the growth potential this year? I don't really know, to be honest. I really, really don't know. It all depends. Because, like, I mean, to size an opportunity, if you're investing in penny stocks, doubling your money is like a split of a second. And that's one of the reasons why I don't do penny stocks really all that often. It's quite scary for me, and it's very hard for me to stomach that kind of pain, that kind of volatility. But in terms of growth potential, if we look at it from a vertical or a sector perspective, I think that would be a better question to ask. So if I was to answer that question, people have been talking a lot about reopening, which is like home theaters, gyms, and stuff like that. I think what I'm still more bullish on is digital transformation. Anything to do with digital transformation, I'm still very, very incredibly bullish on that. Just because for the companies who haven't thought about digital transformation and also cybersecurity, they will be panicking at this point, because the ones who are adaptive, agile enough to move digital, especially during the pandemic, they would have reaped the benefits and separated themselves so far compared to their competitors who haven't done it. So, so digital transformation is like number one for me. and definitely battery supply chains. Yeah, that's still kind of like, maybe I'm biased, like that's maybe that's just the things I'm just interested in. Pancake swap, syrup pool staking, crazy ROI. Well, not yet. I have not studied that enough, so I cannot comment. Any thoughts on the Asia market? I made a video on me putting money towards Asia, and there's quite a few comments around like the political situation and the uncertainty around it. I want to just remind you that like it's you know these conflicts are happening everywhere. It's just a matter of choice. So for me, when we think about the East versus the West, the West have borrowed money up to their eyeballs, in terms of against their future. All of this money printing, they're essentially racking up debt. And the only reason why their interest payments are, not essentially destroying the country is because the interest rate is set really low at the moment. But when we look at the East, they don't have that problem where they're not really borrowed up to their eyeballs. And they're growing. So, and they're growing much faster, compared to the country in the West. So I personally think that it will be somewhat unwise if I don't at least take a look. So that's one of the reasons why I've been taking a look. And generally speaking, I can only speak for myself. When I look at like different geographies, that's, by the way, that's an advantage of a retail investor, because we're not bound by an asset class or geography. We can look across the world, and that's a great thing about being a retail investor. But for me, I tend to not pick individual stocks when I look into different geographies, because I'm not confident enough to do that. So I either use an ETF, or yeah, I mostly use an ETF. But yeah, I'm actually quite excited about Asia, the East in general. DeFi. So there was a quick, hey Blade. So on DeFi, so I think for DeFi, it's really interesting to me from the sense that it's almost completely disrupting our existing financial system, and although the opportunity sounds really good, um, one, I have to put in more time to learn a little bit more about DeFi. But the other thing is that like the banks will not back down that easily. Like our existing financial system will not be like uprooted just like that. So I think DeFi presents a very, very interesting opportunity. And I'm very interested to know how our existing financial system will kind of build around that, or they will resist. I will more anticipate that they will kind of more resist in the beginning. But yeah, it's just the whole idea of like doing transactions without a middleman, and and then yeah, I need to learn more about it. So otherwise, I'm gonna just yabber on. Hydrogen stocks, no comment on hydrogen stocks at the moment, because I haven't put in enough time to learn about it. Indian ETFs are really expensive to keep from Australian providers. They don't really track the gains that well. Oh, really? Okay. Any comments on HIMS? So I had HIMS a while back, and then I decided to sell it. One of the main reasons is that it triggered my pain point. Like basically, I have a pain tolerance level. Once you get through a certain pain tolerance level, it's more about managing risk for me. So for HIMS, they're very targeted towards the millennials in terms of ED, PE, those things. So it's still, I still think it's a great business, but I am still reevaluating where I went wrong with HIMS. So other than that, I don't have too many comments on that. Yeah. Hey Nick, what's my thoughts on Apple, Amazon getting hit even after great earnings? Well, that's the challenge with inflation and rising interest rates at the moment. Like it's this is the thing. Like as retail investors, I personally believe that we need to spend a bit of time to learn macro, like what's happening in the macro, like in the broader economy, and also how does interest rates impact stocks. Because as it stands, if you buy government bonds or cash, you're literally losing money by the second, because inflation will eat that money alive, right? So where else do you go, like as institutional investors? So what else is out there? It's unlikely that that they can go with real estate unless the fund have the scope for them to go into real estate. So basically, if when interest rates are really low, a lot of the fixed income assets like government bonds, etc., they just don't yield anything. So then these institutional investors have to take more risk in order to generate the same amount of returns. That's why a lot of them pile into like Apple, Amazon, because they also can't take risk with like small cap like growth stuff, right? Because they have that fiduciary duty to not take too much risk. It's all about return on a risk adjusted basis. So when it comes to Apple, Amazon getting hit after great earnings, it's just a reflection of the current macro view, where they're anticipating that rising interest rates are more than likely going to hurt the growth stocks. That's a very simplistic view of like trying to understand the hit after great earnings. But at the same time, there is a secondary view of Apple, Amazon facing more risk coming from antitrust laws. They're so dominant in their positions that a lot of regulators are becoming really concerned. So, but Frank, but at the end of the day, it's still a great company. It's still a great business. So I got into Amazon at 3,000 because I didn't believe that just because we're going back to work, we're going to stop using AWS. How crazy is that? Like it doesn't work like that. Your infrastructure doesn't disappear because you're going back to work. Like that makes no sense to me. It's almost like everyone's treating Amazon like Kogan. Like no, they not only do they do AWS, they have tons of other businesses that's generating revenue. It's like wow, no, that's not how I think about it. But yeah, if it does get hit, depending on the company, it could create great opportunities. Yeah. Sorry, that's a long way of answering the question. Hit up. Yes, yes. I think I did a video on that actually. Bitcoin, BlackRock considering adding some elements of Bitcoin into their ETFs. It's essentially these are the signs of institutional adoption, right? So I think it's inevitable that given the level of money printing, that some of these institutions would ultimately think about Bitcoin not as a way to do transactions, but more as a store of value, right? So these are just signs of institutional adoption. And as Bitcoin's market cap gets higher and higher, it enables other like sovereign wealth funds to actually consider Bitcoin because they can't consider Bitcoin at the current level, right? So yeah, that's something to think about. Hey, Roel. I cannot pronounce your name. Sorry if I butchered your name. Galaxy Oro Cobre. Yeah, so I've heard about that. I think was that last week or the week before, and I think that's great. It's really really good for Australia in general because we actually. I don't know if many of you guys know that Australia produce a lot of lithium. We mine a lot of lithium. We produce a lot of lithium, but we extract very little value from the value chain because we sell our raw materials to Asia to be processed, and that sucks because when we sell a lot of the raw materials to other places, they can basically refine it, create a better product. That not only does that generate GDP, also generates more jobs. So I think for me, when I think about that merger, I think about things being great for Australia because we want to capture more of the value over here. Yeah, I'm just really excited about that. Nuix. So I actually don't have too many comments about Nuix. All I know is just in my Patreon, people have been saying that they've been getting hammered left, right, and center, and they're not managing expectations well. So yes, not too many comments on that. Any view on QPM? I will have a view soon, but not now. Not now. Gaming share thoughts on ESPO. So with gaming, the metaverse is really interesting in the sense that we I think especially our generation, and I'm talking about millennials here, we grew up in one of the in this era of we see the games change from Nintendo 64 to to GameCube to we just see the evolution of gaming, and it's so nostalgic to me. That's why that's why I have a gaming chair. That's why from time to time I still play Dota, because it's just such a it's such a different way of relaxing to me. So when it comes to gaming, I think it's more than just games. It's more than just content creation. It's about the digital interactions and also about NFTs as well. Now, I know that some of you, when you hear about NFTs, it's like that's a lot of hype, so on and so forth. Now, what I'm most interested about, the metaverse, gaming, and also collectibles, digital assets, is the authentication process. Like the authentication process for that unique asset, that there's only one of them in the world, that's important, right? And I think gaming provides such a great opportunity, not just socializing, but also create these collectibles that could be captured in value. So in terms of the ETF itself, I'm indifferent. It's just, if you're interested in the gaming sector, cool. But I'm not interested enough to, to allocate capital towards that. Yeah. But that's a personal preference thing. ROU Pay, I last time I read their slide deck, they haven't quite, gotten any revenue yet. And I think they're just heading into Malaysia at the time. So I don't know too much about ROU Pay. Sorry. Any thoughts on Mike Kingdom? Is that a game? Does anyone have live phone number for Robinhood technical support? Yeah, let me know. Wait, did I skip your question twice? Let me scroll up. Sorry. Sometimes it's not that I want to skip your questions, guys. It's just like my feed for messages just like suddenly jumps, and then I just cannot see it. And I also can't see your question either. So if you want to retype that, that'll be nice. Thank you. What's my thoughts on? I think is that Siona resources. Don't know too much about that. Sorry. Oh, thank you. Any thoughts on ARK ETFs? I think the interesting thing about ARK is that when they're doing well, everyone wants to be Kathy Wood's friend. When it's not doing well, everyone's like, Kathy sucks, so on and so forth. And for me, I'm a big believer in the whole idea of exponential age, right? I think Rahul Paul from Real Vision Finance talked a lot about how the dot-com bust was almost like an S curve. It's like so when we talk about innovation, it has an S curve adoption rate. And for me, I'm a big believer in that. So I think during this period when interest rates are hiking, inflation is hot, this is not a good time for growth stocks. So I think that at least for this year, sometime next year, that kind of innovation strategy is just not going to perform well. But people will be like, stepping on themselves, because once you come out of that, and then we'll kind of head back to more of a stable environment, people realize that our world have changed. They stop, sometimes we just have to have the courage to look a little bit further than what we're used to in terms of looking at quarters. So I think when it comes to ARK ETFs, right now it's not a flavor for most investors who are short-sighted. But I hold it. And obviously this is not financial advice, that it's more of a personal preference thing. I've held it since late last year, middle of last year. And yeah, it helps me learn about the industry, helps me gain some new perspectives. But yeah, I honestly think that they are just for at least this period, when inflation runs really hot, they're going to get so much criticism for their strategy. But we all know that Kathy ultimately delivers. So we'll see if I'm wrong about that. SQBG, is that Squarespace? No. Mighty Kingdom IPO. Actually, I don't know anything about it. So help me out. What about the big merge demerges? Telstra, AMP, Tabcorp, maybe a session for them only. Unlock potential. Love your videos. Oh, thank you, thank you. For Telstra, I can't wait. It's been such a long time. They got to do something. Like, I was even a customer at one point. I have to say my customer experience wasn't the best. Kind of sucks, to be honest. AMP was asked a few times, and yeah, I think when a company gets so big, it becomes inefficient. Demerging will actually unlock a lot of value, but I have never experienced one myself in terms of like from an investing perspective. So not too many comments on that other than standing by the sidelines and just watching and learning. Yeah. That's about it. Now, if you guys have any other question, just let me know in the comment section below or leave it in the live chat. And as usual, it will mean the world to me if you guys could gently smash a like button because that will help the video spread, to reach more people. Other than that, if you guys don't have any other questions, I might wrap this one up right here. And yeah, actually, I might just wrap it up right here. So as usual, Otto will always do the honors, and hopefully this time he'll be on point. And I'll see you guys next time. Oh, just retype above. Why can't I see it? I cannot see it. Am I crazy here? Can someone else retype? I'm sure I'll see it in the replay, and I'll type out an answer for you, Jay. I appreciate it. Sorry, guys. I'll try and type out proper comments as well. Yeah. Am I going crazy? I can't see it. Like I see you ask this question, and that's about it. And then for Nick, I'm pretty sure I answered, some of your questions. Yeah. All right. Thank you guys. I appreciate it. I'll see you guys soon.